the jet-setting wealth advisory podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Welcome to the Jet Setting Wealth Advisory Podcast. I'm your host, David T.U. And today we're absolutely thrilled to welcome Dan Nicholson as our guest. Dan is a serial entrepreneur, best-selling author, and award-winning financial expert with passion for helping individuals and businesses achieve their financial certainty. With a career that includes founding the acclaimed accounting and consulting firm, Nth Degree CPA, being named also a top 40 under 40 accountants globally 4 times, Dan is anything but your typical CPA. His book, Rigging the Game: How to Achieve Financial Certainty, Navigate Risk, and Make Money on Your Own Terms, is a USA Today and Wall Street Journal bestseller. Today, we'll dive into Dan's innovative approach to wealth and tax management, explore his entrepreneurial journey, and learn how to navigate risks in today's fast-paced financial world. So, first of all, welcome, Dan. Great to have you here.
David, really glad to be on the show today. Thanks for having me on.
I am just excited to get right into the questions. So your entrepreneur journey is really quite remarkable. Can you share with us how did you, in your early experiences as a serial entrepreneur, which seems like it's since birth, shape your approach to wealth management and financial certainty?
Yeah, I consider myself to be unconventional.
Okay.
And that's a big part of my identity. And the initial reaction people have when I say I'm unconventional is, didn't I also hear you're an accountant? Isn't accountant the definition of conventional?
That's right. Two opposite ends. Exactly.
Two opposite ends. And yes, accounting is absolutely about conventions, for sure. But there's a lot of room for creativity within that. And so, growing up, I was a painfully shy kid with a speech problem and bad teeth, and just a target in some cases for maybe some of the kids. And in many ways, I think that kind of shaped some of my desire to swerve when everyone's going straight. Maybe I want to go to the left a little bit.
Sure.
And so in college, I found a lot of success with having a slightly different point of view. And it turns out professors really like that. I think it's probably because they're grading all these papers and it's like, here's one that's the same. Here's another one that's the same. Here's another, like they're all roughly the same. And then if you have a slightly different point of view, as long as it's well-reasoned and articulate, that gives them a little bit of dopamine. So I kind of learned, I got these feedback loops that reinforced my unconventional desire. So let me just give you an example.
Sure, please do.
Typically speaking, for college papers, it's supposed to be double-spaced and justified to the left, right? So it doesn't line up straight on the right side.
That's right.
And I realized that if you justify the text all the way across, it makes it look visually like you did more than everyone else.
Oh.
Because it fills up the page. But
Sure.
the standard is to justify it to the left, right? So it doesn't bleed all the way across. And so I started doing that. And I didn't have any professor who ever said like, hey, you're supposed to justify it to the left.
Yeah.
I just kept getting A after A on the papers. And I didn't fully attribute it to just justifying across until one of the people who I studied with regularly, and I would consider to be a peer academically, he's like, I feel like our papers are roughly similar, but I keep getting a B on mine and you're getting an A. Like, what's going on? It's like, just try this. But don't tell anyone else, because if everybody starts doing it, then our paper doesn't have a contrast. It's like, just start justifying it across. And this was a case study class. So every week we had to write a paper. And the rest of the term, like 6 or 7 papers thereafter, he got an A on every single one of them. So I consistently and so it's contrast. So like, it just looks like we did more. And so that anyhow, just feedback loops that fed into kind of realizing that the marketplace values people who have a slightly different point of view, as long as it's well reasoned and well articulated.
Fantastic. So let's just step back a little bit. I loved everything you said right there, but tell us a little bit of your background and then your experience, and then how you ended up starting your own CPA practice. So from the point, I guess, college where you attended all the way to now being the owner of your own CPA practice.
Yeah. So first person in my entire family to go off to college and get a degree.
Okay.
My dad was a journeyman machinist. My mom was a lady. They got married really young and decided to give me and my sister a much different life than what they had. And so very fortunate that I was given opportunities that they really weren't given growing up. Always did really well academically. Sometime freshman, sophomore year, I kind of got bored and I got into this loop where I was like, can I figure out how can I do the least amount and just play basketball?
Okay.
And
are you tall?
6'2". So
okay.
Not, tall basketball wise, but maybe, taller in general.
Yes.
Not very many people who went to my high school went off to college. So it's like, if you got a 3.5 or something, like, you were doing great. No one was really saying anything to you.
What city did you grow up in?
It's a town called Renton. It's a suburb of Seattle. More of a bedroom community now. Growing up, it was pretty industrial. A lot of machinists, people who work for Boeing, pretty gritty. Half of the Renton Highlands where I grew up was projects. So it's changed quite a bit. I could have benefited from somebody intervening and saying, like, you were a 4.0 student for a long time. Like, what's going on? But as far as my parents were concerned, I was doing great academically. So, and they didn't really know what to do with me. I was so different than the rest of my family. So I ended up applying to one college, which was kind of, in hindsight, maybe wouldn't recommend my kids do that. I went to a Jesuit school named Seattle University.
Jesuit. Okay.
So commuter student, work for me was to go somewhere where I could commute from home. So lived at home. And went in as a marketing major, and I wasn't planning on getting an accounting degree. And I don't think I fully understood that Seattle U was a top 15 accounting program in the country. So kind of lucked into it. End of my freshman year, I got an email from a guidance counselor, and they're like, hey, UPS, the shipping company, they have some internship and job opportunities. They listed marketing as one of them, and they had all this scholarship money being listed out. Again, I'm commuting from Renton. It's 45 minutes to an hour each way. I'm missing out on a lot of the traditional college experience. It's like, I got student loans. It's like, I'd love to get a marketing internship. I'd love to get some scholarship money. So when I just finished this business communications class where I learned how to do a really professional resume and how to interview and how to really be effective at public speaking. So I show up there, I'm in a suit. It's at a hub in Redmond, Washington, just kind of nearby Microsoft campus. And walk in, I'm the only person in a suit. It's a bunch of guys in like jorts and cut off t-shirts. And I've got to print off of all these resumes and cover letter, and I've got the print off of the email that I received. I watched this video on loading and unloading trucks and sorting packages. And I get to the end and I kind of raise my hand sheepishly, and I'm like, hey, this is cool and definitely not below me, but there's supposedly these marketing internships. Now, like, I have no idea what you're talking about, but there's a guy in the finance department outside, like, go chat with him. So I go out there. About an hour later, they go, hey, we have a part-time finance supervisor role. I think he'd be a good fit. I didn't know that UPS was founded in Seattle, and I didn't know that one of the main buildings on the Seattle U campus was named after the founder of UPS. So I had these deep ties to the university I was going to. Ended up getting this job as a part-time finance supervisor, managing a team of about 20 completely autonomous revenue auditors. I reported up to the regional finance manager and regional controller. And that just changed the whole trajectory of my career and life. So that led me to change to an accounting major and information systems major. That led me to getting an internship at Deloitte. It led the university to nominating me to a fellowship at the accounting board, to the board that writes all the US accounting standards. They asked the top 50 programs to nominate a student.
Okay.
I ended up getting that fellowship, one of 7 accounting students from around the US. And it's just sort of snowballed where I kept accumulating all these experiences and opportunities that I didn't expect. So I really had to change my point of view on what I was capable of. Ultimately, to kind of wrap things up, because I've gone kind of long on answering this question, ultimately, I always wanted to be an entrepreneur. And so I found myself in all these rooms and doing all this work that wasn't really aligned with why I wanted a business degree to begin with. And so I saw an opportunity 15 years ago to do something different in the CPA space. The rest is sort of history.
Fantastic. So that leads me to the book that you wrote, Rigging the Game, emphasizes achieving financial certainty and navigating risks. What inspired you to write this, and how does it differ from the traditional financial advice that you can get on the bookshelves or on Amazon, in the Amazon bookstore?
Well, what I realized as I transitioned from working for Fortune 500 businesses and mostly, say, Fortune 10 businesses and billionaires is that I had to unlearn most of what I thought I knew about business to be successful on my own and to work with small to medium-sized companies. And so there was this process of beating my head against the wall, proverbially, of why are these things that weren't working, worked for me before, are not working in
now.
Clients would ask for forecasts and key performance indicators, and we build them, and then a couple of months later, it's like, how's it going? I'm like, oh, I haven't even looked at this stuff. What do you mean? Like, well, we built it, but it was all just a bunch of fake numbers and assumptions, and so it's not really something I felt like I should do, but it's not really useful.
Okay.
So that kept happening, and I realized a critical paradigm shift. It's like these inflection moments in life where you realize that a lot of things you thought you knew, you didn't know. And I realized that in business school, that is all about one thing. If you were to summarize, what is business school really about? Ignore all the tactics, accounting or finance or marketing. What is it about? It's preparing you to go work for a Fortune 500 company to help them maximize shareholder value.
Sure, absolutely.
That's what you're being prepared for. And that word maximize is really important because Fortune 500 companies, they have to do that. They have a fiduciary responsibility. Maximize is inherently about most amount of clients, most amount of employees, most amount of market share now, as soon as possible. And business owners don't have the resources to maximize. They have to optimize. What is the number one or top 2 goals? How do we put all their resources towards that? So once I realized that, I realized, well, all the tools that I keep trying to implement for clients is about maximizing shareholder value, and we have to help them optimize. And what do we need to help them optimize towards? We have to help them optimize towards their unique definition of wealth, because their business, if they're a purpose-driven entrepreneur, their business and their investments need to exist to serve them and living the life that they want. It's not about all these other shareholders, it's about what they want. The book, Rigging the Game, is sort of the culmination of all the things I had to unlearn and then rebuild to serve purpose-driven entrepreneurs, to have the right tools and frameworks to build the business on their terms.
You've been recognized, and this is the reason probably why you've been recognized to be a globally top leader for entrepreneurs and accountant 4 times for the top 40, under 40. What qualities or strategies do you believe has set you apart in such a competitive field?
Yeah, there's a concept called double loop learning that comes from a Harvard Business Review, I'm
Okay.
familiar book, a Harvard Business Review case called
Okay.
Teaching Smart People How to Learn. So there's a
Awesome.
lot in it. It's a fairly quick read, so I'm going to encourage everyone to get to Google and check it out.
Okay.
But also let me tell you about, and come back to the question that you asked.
Sure.
So the problem with smart people is that we don't like to fail. And in fact,
Sure.
we've learned that we always want to get an A. So anything less than an A is like, what's wrong with me? So you've been used to things probably coming easier to you. And actually, people who are gifted have real issues with effort because they sort of go, if this was hard, does that mean I'm not as smart as I thought I was?
Okay.
Everything's come easy.
Yeah.
And that's where you can see people, I needed someone to intervene in my high school years because I had a real issue with effort. And I started playing this game around what can I get away with?
Okay.
Right. And so smart people can get themselves in traps where they really can't handle feedback because it means they're not getting an A. And what does it mean about their identity as a smart person? Right.
Sure.
And so there's this concept, double loop learning. And it's this idea that you need to engage in something, engage in the process, then you need to reflect what went well, what didn't go well.
Okay.
And then you have to take what you learned from that and then engage again, go back to try it again. Now, for most smart people, they engage in a process, and then when it doesn't work, they will stop.
Okay.
It's too painful because you're used to getting an A on everything, and you worry that there's something wrong with you. Maybe you have some shame or guilt or a lot of internal dialogue. It can look like blaming other people. That they didn't explain this to me. It's called the fundamental attribution error, where we attribute bad behaviors from others as something wrong with their character or competency. And the trick, anytime you work with a smart person, is you have to enroll them in this double loop learning.
Okay. Okay.
And explain to them that the shortcut to doing something extraordinary is that it's going to be hard at times, and that you have to figure out why it was hard and then solve that problem.
Okay.
And so what I think I have done well, and has set me apart from other accountants or other people in industry, is one, having a mentor who told me to read this, okay, and told me you're going to blow yourself up unless you address these issues. So one, great mentorship, and then two, constantly reflecting on, hey, why am I not getting success with my clients?
Okay.
They suck, they're incompetent.
Okay.
That's what a lot of us go to. And I'm guilty of that too. I'm no better than anyone else. I have my times when I do that. But it's coming back and going, no. Something isn't working. What can we do differently? And it's that relentless in everything that you're doing, reflecting and trying to uncover what needs to be adjusted.
Sure. Understood. Your practice, your CPA firm, Nth Degree CPA, it is described as an award-winning firm. What unique services or methodologies have helped the firm stand out in the accounting and financial consulting industry?
Yeah. So when I started the firm 15 years ago, what I had recognized is that nobody at the time was, or at least not that I was aware of, was targeting small to medium-sized companies with strategic tax planning, with CFO level services, and particular doing it on a fixed fee or value-based charging.
Okay.
Now it's become a bit more commonplace for firms to offer tax planning, CFO level service, and to not charge by the hour. But 15 years ago, if we weren't the first, we're one of a handful of the first in the US. I know of a couple in like Australia, New Zealand that were doing this around the same time. And so we built a roadmap methodology around how we assess our clients' overall tax planning and their overall financial situation. The tax planning side uses something we call the 4 levels of tax planning. Okay. We can show clients how to oftentimes reduce their taxes. Small business owners pay the highest average tax rate, 40 to 60%. We can often show them how to reduce their tax rate to 0. Magic, right? And then show them how to grow their primary assets. So for business owners, typically 85% of their net worth is tied up in the value of their business. Only about 2% of business owners know the valuation of their business. And most of that 2 percentage points only know because they're closing the business, it's worthless, or they're in the process of selling it. Okay. So our primary asset, we don't even know the value of. We don't have a way of, that's like putting all your money into a 401k and never looking at the statements.
Right.
So we want to show you how to systematically scale the value of your business with the least amount of effort, least amount of risk, most amount of options. Mm-hmm. And the first lever is to show them how to reduce their taxes.
Okay. Now, do you do all that in-house, or is that something that you consult?
So we don't sell any investment products.
Okay.
We sell real estate. We don't sell insurance, but there are some products that clients may consider, and those would be things that we would educate them on all their options, okay, but ultimately connect them with vendors or work with their primary vendors to implement those.
Okay, fantastic. Okay, so you do work in the financial services on the investment side and insurance side. You would just find the strategic partners to help you execute those ideas and those strategies.
That's right. Yep.
Okay. Very good. So in today's fast-paced and complex financial world, what are the most common mistakes that you see that entrepreneurs and small business owners make with their wealth management firm?
With their wealth management firm specifically?
I'm sorry, with their wealth and tax management.
Oh, okay.
Not the firm itself, but
gotcha.
Okay. Strategies that they.
That clarification.
Yes.
So the tip of the spear, the lead issue, if I were to ask a business owner, what are your rules around money?
Oh,
which I have asked maybe 2,000 business owners this over 15 years.
What do they say?
Rules around money. They usually tell me a dad joke, which is have as much of it as possible.
Yeah.
Yeah, well played. Touche. You got me on it. Yes.
Yep. That's a good one.
It's sort of like, yeah, that's an outcome that isn't a rule. So I totally get it. I get have as much as possible. But in other words, you don't have any rules. You do not have an investment thesis or principles that you're utilizing to aid you in your decision making. And what I talk about in my book, Reading the Game, is one of the kind of main issues on the front end to recognize is that as humans, we're all subject to biases.
Absolutely.
And it could be, in particular, many of us are controlled by things like loss aversion. So a loss hurts 7 times more than an equivalent gain. So we will try really hard to not have to recognize a loss. Now, a loss could be, I bought a thing for $100 and now it's worth 50. So I lost $50 when I said sell it.
Sure.
Another loss is related to ownership bias. So we value things that we own more than things we don't own, which makes sense. I care more about my house than my neighbor's house. Sure. They're nice people, but you know, if something's got to happen to someone's house, I care about mine more than theirs, right? Ownership bias. I don't mean to sound like a bad neighbor, but that's just the reality. Bias also applies to our ideas. So we own our ideas and we will weight the value of our ideas over other people's ideas. Okay. If we have a bad idea, it's really hard to recognize that we had a bad idea because then we have to recognize a loss. The best traders in the world, you probably know this, are exponentially better at recognizing losses not because they trade into bad positions, but because when they do, which will happen, they realize that it would be better to trade out of a bad position as soon as possible and reallocate it to something that will get me back to break even faster.
Sure.
Most of us won't do that. We'll be the people at the craps table or the blackjack table, taking more money out at the ATM, trying to get back to where we came at the beginning, right? So we're subject to biases. So if we don't have an investment thesis document or a series of rules, we are going to be at the whim of our emotions on a day-to-day basis. And in some days, there's an epidemic among small business owners around 2 things: loneliness and proving that they're good enough. And consequently, on those days where you're feeling very lonely because you're the boss and you got to make the tough decisions, or days in which you feel like you have to prove it, if you're not aware of those biases, you're incredibly exploitable. meaning that someone
Absolutely.
is going to come in and sell you a quick fix, 5 steps to this, 3 steps, a 7-step, do this on autopilot, and you make all these random investments. I call them bets, but you call them investments because it feels
Mhm.
better, that aren't paying off, that aren't beating the market. So you're working way harder than you needed to
Mhm.
because you're not even beating the S&P 500. And so to circle back to the actual question, the main thing that small business owners need to do, step one, is set a series of rules around how they're going to handle their money, because every business decision is a financial decision.
Sure.
And everything else stems from that. Now, I have 15 core rules that I enroll my clients in, and it's a little bit of a fill-in sheet so they can customize it.
Okay.
I help them so they're not starting from zero.
Okay. Would you like to share that?
The 15 rules, or
Well, just like the top 2 or 3.
so the number one rule that I tell folks, step one, is you need to know what I call your solvable problem. That's your
Okay.
unique definition of wealth.
Okay.
We don't know. So think about it at like Google Maps. You can put in a destination, but if you don't tell Google Maps your starting point and you don't tell it how you're going to get there, it can't calculate.
Sure.
Now, most of us will, at some point in our life, do a vision board, and it'll feel really awesome. You're going to have a 6-pack, and you're going to be a great spouse and a great parent. You're going to have a nice car and a second home and all this other stuff. But that's not a solvable problem.
Mhm.
It's a multivariable equation because it doesn't tell you how much each of those things cost. So no date, no dollar value.
Okay.
So I have a methodology I write about in the book. I have some worksheets and everything to help people turn their vision board into a solvable problem so that we can do a Google Maps and calculate based off your current resources. Here's how long it's going to take you to get
Okay.
there.
Sure.
Your business and everything exists to serve you, then we need to be able to measure, are we getting closer or further away from funding that solvable problem?
Okay.
Do you have a solvable problem? Number 2, and a lot of people would be in a much better financial position if they would have done this back when they got a bunch of free money from COVID bills.
Okay. Sure.
Characterize your money as either recurring, i.e. expected, or windfall.
Mhm.
So the ERC money that you got, the PPP money, the EIDL funds, those were all windfalls. And a lot of people changed their lifestyle significantly because
Sure.
they treated it like it was recurring.
Yes.
That leads to my next rule, which is only recurring money can be used for recurring expenses.
There you go.
So if you get a windfall, you can use windfalls towards one-time expenditures or cash reserve, which is the 4th rule that I have for folks. You're not using windfalls for ongoing expenses because you don't have sufficient ongoing income.
Mhm.
A lot of people, again, bought bigger houses. They moved their kids to private school,
Sure.
bought nicer cars, and now they're in dire financial straits, compounded by inflation, but their expenses are higher, both because of inflation, but also because they bought things that cost more. But their
Absolutely.
income is the same because they
Right.
allocated their money towards things that isn't generating a yield. So
Correct.
those are
Yes.
the first 4 rules from my financial rules.
Fantastic. Now, are you willing to share the remainder, perhaps the list, and we can post this on the podcast down the road if you'd like to do that? That's up to you.
I can give you a couple more as a condensed version, but keep exclusive to clients.
Sure. No problem. So just provide us what you have at the end of this, and we'll post it. It'll be on the people's screens. So
Awesome. Sounds good.
fantastic. Perfect. You built a platform like Certainty U and Certainty News, which reaches over 1 billion users monthly. How do these platforms contribute to your financial education and empowerment and empower their users to make better financial decisions?
Yeah, so Certainty U is kind of an offshoot of the book and a software platform that I've been building called the Certainty app, which is
Okay.
one of the tools that clients can use to set up and track their solvable problem and implement some of the other money rules that I have.
And this is an app that people can download, right?
It's a currently web-based app.
Web-based. Okay, there we go.
And so what I realized was if I were to get some of these concepts to be broader diffused,
Okay.
that I needed to use a different channel than CPAs. Because as you have, I'm sure, experienced, if he's talking about like diffusion of innovation, CPAs are laggards, meaning they're like the last people to want to do something.
Very difficult for adaptation of new ideas and new concepts and new strategies and whatnot. New technology.
Absolutely. I was mortified when COVID happened and I learned how many CPAs were still entirely paper-based and not e-filing, and they caused a mass retirement. Almost 400,000 accountants have left the industry since COVID. Partly
Wow.
because of age, but they sort of just went like, I'm already in retirement age. I don't want to implement all this new software. Let me build an army of other people who aren't CPAs, who've learned my methodology,
Mhm.
and who can help people implement a solvable problem. It's
Okay.
a solvable problem framework. I've got a book coming out that I co-wrote with 8 of my students who went through Certain You, that are different applications of the solvable problem to fitness, to marketing, to a broad range of different industries. And so I've had about 100 people who've gone through the Certain You certification called Certified Certainty Advisor. And they're learning all of my methodologies specifically so they can reinvent it and apply it to their domain of expertise. These are for non-CPAs. I've had 2 or 3
Non-CPS. Okay.
go through the program, but what I realized was I'm not going to be able to put CPAs through this in the timeline. So let me bring in copywriters, marketers, fitness folks, operational consultants who are eager to learn new things and help their clients solve a problem, and they can help me distribute these concepts.
Okay.
So we've had about 100 people get certified or go through the certification program to become certified certainty advisors. So that was the basis for Certain You.
Okay.
And that also helped me kind of finish writing my book. Then when the book came out, to answer the Certainty news, I did some conventional PR stuff that my publisher had recommended. And I found there was a lot of smoke and mirrors and a lot of, hey, so-and-so, Inc. magazine has this idea, this topic. You have 12 hours to write an article for this, and maybe they'll select it because 1,000 other people are going to turn in submissions. I don't think I have time for that. So then I hired a different agency, and they said, we can get you guaranteed placements at Men's Health and Entrepreneur. So we do that for a few months. And what I found is that they were ghost articles. So I'd have the links, but no one could navigate to them. So I wasn't getting a new audience. And then as I kind of pulled back at this, it's like, oh, this is pay to play. Told some other marketing friends stuff. They're like, Dan, you didn't realize that this is all like pay to play?
Yeah.
No. So looking at how much I was spending and how little reach I had, and started peel back the onion, have a few conversations. It's just being curious, sort of the double loop learning. Ended up getting connected with the CEO of the largest syndication company in the US. They're basically the only syndication company you can use if you want to get onto Apple News. They do all the top news sites. And just after a series of conversations and stuff, we got syndicated to MSN, Smart News, Google News, et cetera, et cetera. And so when we publish our content, it automatically gets syndicated on all these other sites. And so I built a business where essentially we can, for a fraction of what you pay for PR, we write the articles. I have a team that writes everything for the author. They vet it, do it, because some of the stuff is technical as well. They don't need to quickly scramble to write an article that may never get published or get published on some random website they've never heard of.
Sure.
We handle all of the research and initial drafting, they review, and then when we publish, it gets distributed to all these different platforms, and then they take the content and they now have all the content that they need for a newsletter.
So the content is created and generated in-house with you. And
I have
that. Yeah. You have a team.
I have a team of editors, writers. Yep.
And then the distribution basically is the syndication company that you use.
Yep. Once it gets published on our site, then it gets broadcast to all the other syndication.
All the other places. Okay. Very good. Interesting. Very interesting. Changing topics just a little bit. What's the I should say, with all the rapid changes in the tax laws and the financial regulations, we went through 10 years of that. And it looks like with a new administration that's going to be coming in on January 20th, it looks like potentially more tax laws and regulations may be changed, whether it's deregulation or whatever it is. How can individuals and businesses stay proactive rather than reactive in their tax management strategy? What advice would you give at this particular time in the current momentum of changes?
So my first piece of advice is a little bit hyperbolic, but if you think that you needed an administrative change, presidential change to pay zero tax, your CPA has not educated you on what's going on in the world.
Okay.
Data. I'm a data person. I believe in this quote from W. Edwards Deming: every system is perfectly designed for the results you're getting.
Okay.
If you want a different outcome, you can be a victim and just feel bad about it. I don't recommend that.
Okay.
Try and change the system, or you can change your behavior.
Okay.
It's really hard to change the system as it relates to tax code, so you can change your behavior. So to change your behavior, you got to compile data. So let's go back 100 years. In 1940s, we had a marginal tax rate of in the 90%.
Yep, 94% to be exact. Yes.
In 1982, we had a top-end tax rate of 70%. Right now, you could say we have a top-end tax rate of 40.8% when you factor in Medicare surcharge and some other things, net investment.
Okay.
So we've had as high as 90, we've had some 70s. Right now, we're at one of the lower top rates. Okay. Now, with that, what has the average tax rate been by all taxpayers by year during that same period of time? It's been between 15 and 18%.
Okay.
So we go back to 1980 when the top end tax rate was 70%. The average tax rate paid by all taxpayers is almost exactly the average tax rate that was paid over the last 4 years.
Okay.
So how is that possible? Because those who have a lot at stake are constantly modifying their behavior to pay the least amount in tax. Over the last few years, there's been a lot of new options for ways to minimize your taxes. It's just people don't know about them unless you're part of the ultra high net worth. It's hard. It'll likely become easier, but you could have gotten the same outcome of paying an average of 15 to 18% for the last 100 years. The average tax rate, if you graph it by year, doesn't really fluctuate by more than a couple percentage points, irrespective of the top end tax rates. For example, did you know about the sovereign tax credits? So sovereign tax credits started in 2023. They're issued by the Department of Treasury as part of a broader program, $5 billion a year, in connection with Native American tribes. Native American tribes pay no federal income tax, but under these regulations, they are able to generate credits from the Inflation Reduction Act. And the Department of Treasury has given them permission to sell those credits to other U.S. taxpayers. So in 2023, you could buy credits for 60 cents on the dollar. So if you had a $100,000 tax liability, you could buy a $100,000 tax credit for $60,000. Then you can carry those forward 5 years. I had a client, as an example, who came to us last minute, and you could buy these credits all the way up to when you filed your return on October 15th of this year or 2023's tax year. So they came to us at $750,000 in tax. We're way past the year paying up 10 months roughly. And so for $450,000, he bought $750,000 worth of credits, saved $300,000.
Now that came out in 2023. Is there also these types of credits for 2024 and the next 4 years, I should say?
Yeah, so the program continues on. They're not at a 40% discount going forward, but they'll be at a 25 to 30% discount. So
okay.
The tribes offered larger discount year one to build interest in the programs.
Okay.
Very few people know about them. But even a 25% or 30% discount is significant, right?
Yeah, it's better than the dollar for dollar.
Exactly. So it's the last strategy. It's not the first strategy. So you
Understood.
might stack up. So level one strategies, things you already qualify for, you just didn't know about it. Level two, incremental adjustments to make a current expense that isn't a deduction turn into a deduction. Those are usually $50,000 to $100,000 a year and missing things that clients aren't aware of. So you take that off your income. Then you look at the remainder. Then we want to look at home run strategies, things that can reduce your tax liability by 25 to 100%. Ideally, we're acquiring first things that are assets that will produce income, appreciate in value, and have a tax benefit. Real estate would be the most widely known about. It's
Sure.
not the only thing out there. There are actually, I would argue, a couple things that are even more high leverage than that.
Mhm.
Fairly technical, but
Okay.
they're out there. Implement those strategies. Then if you have a remaining tax bill, then you'd want to utilize the credits to get a discount on the remainder.
Now, is there a maximum AGI that you can do this sort of offset for these type of?
Theoretically, there is, because the program is $5 billion a year in credits.
Oh,
So if your tax liability, you could conceivably buy the whole $5 billion. So if you have that problem,
yeah.
you should be using a different strategy anyways, like
Sure.
an LLC with charitable intent,
Okay.
private placement life insurance.
Sure. Exactly.
But
Exactly.
generally speaking, and the 2023 credits were not fully subscribed. So
Oh,
by the end of there's still remainder.
okay. So that means that instead of taking the 25% discount, there's still 40% discount that's still available going into 2024.
There is still funds available. The
Okay.
Department of Treasury issues some guidance around this. And as happens for things that are new, is that there's still some lack of clarity on.
Sure.
There's one section of the guidance that suggests that you could buy them now and still amend. And then later there's a section that suggests that you needed to have purchased the credits by October 15th.
I see.
So we're still waiting on some legal opinions from tax attorneys around what is viable. In other words, could clients still go back, buy the credits, amend, offset what they had in 2023, and then carry forward? Because you're allowed a 5-year carry forward. So theoretically, you could, not theoretically,
You can.
clients where you'd stack up at the more significant discount enough to eradicate your 2023 and you want to carry forward. At some point, the time value of money doesn't justify loading up too much beyond a couple of years, but that is a strategy.
So let's continue on. Your podcast, you are a host of your own podcast called Rigging the Game. It focuses on financial certainty and navigating risks. What have been some of the most surprising lessons or insights that you have learned from your guests, or just surprising lessons from your guests?
I think there's a through line of people who come on the show who recognize that doing what everyone else is doing in the marketplace within their industry is a recipe for mediocrity.
Absolutely.
And it's interesting to me, the paradigm or the way that it's been presented in a bunch of different ways, but consistency that everyone has sort of found their own unconventional way of doing things. And I have this thought that was similar to realizing that if you need to optimize instead of maximize. And I noticed this pattern amongst clients, and they'd come to me and go, okay, why'd you start this business? Like, well, I want financial freedom. I want to do something unique. And then over time, because you can be in so much pain because you're trying to prove yourself. You have what my mentor calls the two tyrants of leadership: scrutiny and expectations. So scrutinizing you, and the same people who tell you that you can't do it are also the same people who go, well, of course David would do this. David, it always works out for David. It's like, weren't you the same person who didn't think this was going to work out 2 months ago? And now you're
right.
Of course you are.
You've embraced it. Yeah.
So, and it's usually the people who care about you the most that give you the most scrutiny and most expectations, because they're just trying to protect you, just trying to keep you safe. I'm doing this lovingly.
Right.
So over time, you're a little bit more exploitable, and you start going to all these masterminds and you start hiring people, and you're like, can you just give me the 5 steps? And what ends up happening is that you end up with the same exact marketing playbook as all your competitors. Very similar website and a very similar social media profile and all these things. And then the market can't distinguish you from anyone else. So in other words, in the process of trying to do something extraordinary, you become ordinary by just conforming to system.
Yes.
So I think one of the things for people to rewire is that it's okay to be a weirdo. Don't do anything creepy or illegal. I don't mean that, but the billionaires, they were all called weird before they were called eccentric. So eccentric is the loving word you give rich people, right? Like, oh, Elon Musk, he's so eccentric. And people will discount things that he does because he's had extraordinary success. But I can guarantee you when he was doing stuff as a kid that wasn't what everyone else is doing, he was called weird and maybe social outcast. And I don't know all the nuances, but it's important to remember that people who've had extraordinary success, they're almost all a little bit different than the norm.
Sure. I agree. They all have just this little, doesn't have to be a lot, but just this little sliver of difference. And that is what makes them the success that they become. Completely get that. You've created and ran multiple small businesses. How has this hands-on experience influenced your understanding of the challenges and entrepreneurs that they face in wealth and tax management?
I think the biggest thing I've learned is that we're all fighting these silent battles, and many of us are, unless the conversation is made explicit, that our primary motivation is to answer 2 questions. Am I going to be okay? Am I going to have enough money to live the life that I want? And am I good enough? And the sooner that you realize that only you can answer the question, am I good enough? The sooner you will get out of this cycle of
self-doubt
and out of the cycle of constantly working, even when it's unnecessary. All the anxiety work that we do, busy work that we do, is that we run a race against ourselves, all in the nature of like proving it. And the most helpful thing that I was told around this, because most of my life I have operated from the frame of proving it,
right?
Until my mentor said, Dan, you call yourself a stoic, or you consider yourself a stoic, but proving it is inherently Epicurean. It's the most self-indulgent thing you can do. And so you're not truly a stoic if your main motivation is to prove it or stick it to other people or demonstrate, put more points up on the board. And for me, that really resonated, that proving it is the ultimate self-indulgence, because there's no government agency or independent body that you can just submit all your data to and they come back and you're like, you made it. You've proven it. Only you can answer that. So I think a lot of the ways in which we don't achieve the wealth that we want come back to wanting to try and prove it and some of the loneliness battles that we're fighting.
I get it. Been there many times myself. I understand. You're the king of a hill, but there's only one king on that hill. You're there on the lonely planet. Fantastic. Great content so far, and I appreciate it. Let's continue on. As a consulting producer, PBS's Opportunity Knocks, which is the show, title of the show, how does storytelling and media engagement enhance financial literacy and inspire people to take control of their financial future?
I think that there is a lot to be said to normalizing the discussions around how difficult financial decisions are and how much misinformation there is about wealth creation. So the more content that's out there that normalizes tough decisions, the better, as far as I'm concerned.
Right.
And to the misinformation point, there's a lot of especially in the small business space. There's a lot of pathologizing that happens around things like risk. You're never going to be successful unless you go all in on yourself. And that causes people to make really bad decisions where they mortgage their house or they make what I call
Leverage up.
they leverage up, but they're not making bets that are asymmetric to the upside, meaning way more up in downside.
Right.
And even when you study the roots of burn the boats, which is a popular saying in the business community, even you study the backstory of it, it's actually a story about taking the least amount of risk.
Right.
It's just this part of the story that's not told. So the more that people understand risk better and the fundamentals of financial decision making, the better, as far as I'm concerned.
Okay. And let's finish off with our final question here. For those that are just beginning their journey to the financial certainty, what are the 3 actionable steps that they can take today to align their wealth management with their personal and professional goals? What's your thought about that?
Yeah. So number 1, get your money rules in place.
Perfect.
Everything stems off of these rules. And number 2, get clear on your solvable problem. We can't really measure the effectiveness of your decisions if we don't know what direction you're headed. And so get clear on your solvable problem. And lastly, it's one of my 4 wealth commandments that I write about in the book, Certainty Commandments, is that you have to understand the difference between preferences and fact and fiction or binary. So once you realize that 80% or more of the questions that you're asking are preference-based questions that only you can answer, the faster you'll be able to make decisions. A lot of us are out there seeking consensus, trying someone to tell us the right or wrong answer. And it depends on what you want. And so understanding that, and then it should go back to your solvable problem. So what do I want? Will this decision get me closer to what I actually want? And you have to understand that what you want, there's more than one currency. So what you might want is money, but chances are you want time. There's something that you want related to your identity. Maybe you need more energy. Maybe there's something about your reputation that you want to change. And so when you're asking those preference-based questions, understanding the currency that you actually care about.
Fantastic. And any final words?
The biggest risk in life is not living the life that you want. So the sooner you get clear on the life that you want, the better.
Excellent. Thank you, Dan. We want to thank all the listeners and the viewers for joining us today on this episode of the Jet Setting Wealth Advisory Podcast. I want to thank you, Dan Nicholson, for sharing your groundbreaking insight into achieving financial certainty, navigating risks, and creating wealth on your own terms. If you're interested in learning more about Dan's work, including his best-selling book, Rigging the Game, or his innovative ventures like the Nth Degree CPA and Certainty News, be sure to check out his website or tune into his Rigging the Game podcast. Do you have a contact info that for people that are listening to this, that if they want to get a hold of you, how should they get a hold of you?
Yeah, riggingthegame.com has a bunch of different ways that you can get in contact with me, or you go to nth-degreecpas.com, and there's a couple of different ways you can get connected with my team.
The Nth Degree CPA will be on your screen right there. So we appreciate your support and look forward to having you with us on our next episode. I'm David Yu, airline pilot and your pilot through the world of wealth and founder of DTY Wealth Planning Solutions. Don't forget to hit subscribe and leave us a review. Until next time, keep your financial course steady and your strategies bold. Goodbye.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.